Into it. It is April 22nd, Monday, and we'll do what we always do, and that is zoom out to the monthly and see what we're looking at. So on the monthly, we can see we've come down. We got a cessation of one time frame. Remember, this is a cash only chart. We are still below the previous month's low of 50.63, which is going to be a very key reference, right? If the market is able to get above that, there is some possibility that there could be some strength coming into the market, or at least some momentum traders probably getting stopped out, right? As people tend to trade breakouts, and this would be a breakout on a monthly basis or breakdown on a monthly basis from the previous month's low. So something to pay attention to. Other than that, really, you've got to remember the bigger picture. The trend is still up. We still have, more or less kind of a 2-month balance, right? We're breaking down a little bit here, a little equilibrium forming here. Really, if you look down here, there's that a bigger equilibrium that's down near that 4,600 level. That's going to be kind of the key level that you want to be paying attention to. Should there be continued breakdown, obviously that's a pretty decent ways away, about 400 points lower. Switching over here to the weekly, you can see we ended the week with a -4 week, right? We had suspected that the odds were going to be the -4 week and ended up being correct. We see we traded lower, finishing with a close last week of that 50.0375. And that's going to be another key level we want to pay attention to, right? Momentum traders, if they're piling it into the market, trying to trade this momentum, they're going to be looking to get the market below that level and continue to trade the market below that level. Should they get the opportunity. We are trading a little bit higher right now. You can see we're trading 50.31, so we're trading about 30 points higher than that weekly close. So that's going to be something to pay attention to. If we do stay above that level, that 50.03 level, there is some possibility for some short covering, momentum traders possibly offsides. We definitely want to be paying attention to that as as the week rolls on. There's not really any significant Fed speakers this week. I think this is kind of the Fed blackout week. So we also want to understand that there's not really any treasury notes or bond auctions this week either. So kind of a light news week. We do still have some economic events, none today, some tomorrow, but going into the week, right, that's going to be a very key level that sellers are going to want to be pushing the market below. Switching over to the daily time frame, we can see on Friday that the market continued to move lower, -4 day, and we are still one time framing lower. We've yet to have that cessation of one time framing. So 1, 2, 3, 4, 5, 6, 7 days in a row. The first time we've had that in a while. We've had 7 days in a row to the upside, but not 7 days in a row to the downside for a decent amount of time. Now, if we look back here and kind of see this uptrend, really, I guess we could draw it from here. Kind of maintains this way up, and then we can see now it's kind of maintaining downward, extended down from this trend line. So the reason I'm bringing this up is, even if we do get this move up, remember, we're still looking kind of at this downtrend. I wouldn't be surprised to see a move back towards this 5120. And when we get to the profiles, I'll kind of show you what I'm talking about, where the buyers need to get this market above to really have any chance at all. And you can kind of see on a daily time frame, we've got some single prints here, so definitely some liquidity trapped up here. So it wouldn't be surprising to see them up here, see a reoffer, and then continue to the downside from there if they are going to continue that trend. If we move this all the way to the October low, you can see it's still the same trend. So it gets pretty extended, pulls back to the trend line, gets extended again, pulls back to the trend line. So, you just got to kind of understand how trends work. Don't get kind of spooked out by every single micro movement in the day. I know a lot of people on Friday started to get a little bit bullish, thinking that the market wasn't going to go down for one reason or another, because we had that big dip low in the overnight and then we popped back up. But you always want to maintain your perspective, and that's the whole point of us doing this. Now, switching over here to the profiles, we can see a little bit of review from Friday, right? A period kind of just danced around, didn't break the previous day's low, but then B period did break the previous day's low. We got a little bit of balance right below the previous day's low. Market shot down, bounced back up, traded right mechanically off of the T1 low, and then sold off, finishing with a poor low. Now this is just going, really in agreement with basically everything that we've been talking about. That this selling is not really big money selling. It doesn't seem, at least, right? Just because of how mechanical it's been. It's been very mechanical on the way down, very sold off of very easy to see references. What it seems like is that there's just no big money buying into the market, right? And if we take a peek real quick at the COT report, and I'll just pull it up over here, you can see, according to this report, that institutional money really were just liquidating long positions, so taking some profit. They added a little bit to the short position. That's about 25K. So about half of the profit that they took, they added to their short position. And you can see leverage funds buying and closing their longs. So adding to the long and cutting their shorts, that's kind of double buying there. And typically, right, as we see, they're pretty much on the wrong side. So no surprise really there. So before we get into what we're going to look for today, this is kind of what I was talking about, and this is that 5130 area. And this is really kind of the line in the sand. You can see the single prints on the profile, and you have an upper balance, right? And then we kind of have this imbalance as the market's continuing to move down. I wouldn't be surprised to see a little bit of balance first, and then them try to move it up, right? Or low here. So that's going to be a key for sellers. If they can't break that level, we definitely want to be cautious of that. But if buyers can't get this thing back above this area, it would definitely tell us that they're a little bit weak, and then we should probably be expecting at least balance, if not some more downside, as sellers are kind of in control of the market presently. So switching over to today and kind of what we're expecting today, right? We have a bit of a double distribution on Friday, kind of a larger distribution up here, right? A little bit of a ledge. And then you have this distribution down here. So the key really will be to kind of follow those levels. We do have a -4 week, so we've got to be very cautious getting short above that. Not that there's not going to be opportunity, but just that you definitely want to exercise some caution. And if you look at the overnight profile, very kind of ugly looking overnight profile, but overnight inventory is 100% net long. We actually did open up on kind of a weird little gap, right? We had to settle 50.03, and then you get that overnight opens up like it was like 50.14.75 or 50.13.75, something like that, and didn't really trade much lower, down to 10 or something. So we can see a lot of volume coming in here closer to the market open. What we'd like to see, or what we're kind of looking out to see, is there's going to be some opportunity here, I think, to kind of play the inside of this balance, and that would be a pull to half back, and then pretty much back up to that T1 low, and that T2 low possibility. A break of half back really kind of puts us back into this kind of, more of a balanced look, or more of a choppy look. And then really, once we get below the settle, or if we get below the settle, you have some opportunity to trade down to that weekly low. But down there, I think also it gets a little bit cautious, as the market could rebound back up towards that settle, and we could finish in this lower distribution. So there's some opportunity here on both sides today. But I think really, for the most part, you're probably expecting balance until we breach one of these highs, or the low. So even if we do get some upside up here, a lot of references up here, you can see they're kind of clogged up, all these lines right here. So a lot of previous references. And for me, I have kind of my no-go my go no go level at that 50-51. And that's an area where I want to see buyers establish, and they'll be the first look that they would look to establish to, try to get the market higher, right? We have the prior month's low sitting up here. I guess I could change the color of this so it could be a little bit easier to see. Go ahead and put it like that. So we get that prior month's low, that 50.63. Above that, like I said, if we get above that, there could be some more short covering, and that could be the fuel that these buyers need in order to take the market up higher. Now, one last chart before we go. I want to bring over this COT chart. And so we can see here, we'll merge this one together. So our last COT report, like I said, showed longs or long money, as I like to call them, institutional money, liquidating longs. Right, so you get that liquidation look there. And what was dumb money or short money, as I like to call them, what were they doing? They were covering shorts and buying the market. Right, so they bought the market, so you get this liquidation, bought the market, liquidation, but then we get all this volume down here. And so to me, I'm thinking that's the reoffer of that 25K that we saw. So institutional money cut about 59,000 positions of their longs. That's that liquidation. And they added about 25K of shorts. And I'm thinking this is the key. And that's why I'm saying this is the line in the sand. If they can't get above that position, then these guys are going to reoffer lower, and the market is probably going to continue to trade lower. Now, we can see this is our developing profile, right? This will finish tomorrow, Tuesday, and then we'll get the information on Friday. But for the most part, this has just been kind of, back and forth. The ranges are getting a little bit wider, especially as the volatility has been breaking down and we've been getting kind of extended to the downside. So key level here, and that's why I have this go no go level here at this 50-51. I think if we see acceptance above that, we kind of get accepted back into where most of this volume is at, and then the odds start to increase that we trade back up to that 5100, which is that previous COTS VPOC. And then, decision time from there. Are they going to buy it or are they going to reoffer it? And that'll be the key. If we see a bunch of volume come in and the market can't get back above this lower distribution from the previous COT, then the odds are probably pretty good that we can get on another sell up and look to trade back down towards that 5150 or back down towards these lower distributions towards that 5,000. But other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan, and I'll see you guys tomorrow.